Right. Susan, can you hear me?
Yes,
We are live.
thank you very much.
Go ahead.
Good to go.
Okay, this is the Finance and Audit Committee meeting for Thursday, January 12th, 2023. I call the meeting to order. Teresa, would you call roll?
Bob,
Here.
Dr. Pandolfi,
Here.
Michelle,
Here.
Ron, and Gordon.
Here.
Okay, thank you. We have a quorum.
Okay. You have the agenda. Any changes? Corrections? Michelle or Yummy? If no, I'd ask for approval or a motion to approve in a second.
Motion to approve. Michelle.
Second, Yummy.
And all in favor, say aye. Aye.
Aye.
Aye.
And aye. Okay, we don't need either of them. You have the minutes. Are there any corrections or changes to the minutes on board docs? If none, I'd ask for a motion in a second.
I move to adopt the minutes from the December 8th meeting.
I'll second Michelle.
And all in favor of approving, say aye.
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 And aye. Okay, that's everybody. Okay. Next item on the agenda are the monthly financials. I've asked Quan to, as opposed to giving us the board report summary, to just focus on the financial statements at this for us. And we'll get to the higher level stuff. I think he'll talk about the higher level stuff in the process. So you should have on board docs the balance sheet, the general fund P&L, and the other financials, the capital fund, health insurance fund, et cetera. So Quan, would you take us through the December report?
Thank you. We are at the middle point of the fiscal year. We have started to receive new tax dollars from all three counties. At the end of December, we received a total amount of tax revenue, a little over $20 million, which is about $500,000 below last year's number. Clay County is about $50,000 below, and Jackson County is about $500,000 below. Platte County is about the same amount as last year's. Last year, in December 2021, we had a transfer of $6.5 million from the operating fund to the debt service fund. This will happen in January 2023. Again, we use that money to pay for the debt for the current year.
Quan,
Yes.
Is there anything to the timing, or is it just strictly when cash is available?
Yeah, it's just a recording on the general ledger side. I sometimes I do it in December, sometimes in January. Depends on the amount of available. Yeah.
Okay.
Payroll and benefits, I believe, right now at this point, it's about 48% of the budget. I believe we'll be very close to the budget at the end of the year, but it depends on the turnover rate and other things. Library materials, we're a little over. We are about 53.8% of the budget. That's because we paid all the annual subscription fees for database at the beginning of the fiscal year. And I believe we will spend close to the budget, but will be little below the budget. Other operational accounts is about close to 42% of the budget. Again, I think based on the past experience, I think we might be $500,000 below the budget for library materials and the library operational accounts.
Can I ask a question?
Sure.
You said that the library materials you think will be over budget for the year?
Maybe close to the budget, little below the budget.
Material, okay. Okay, I thought I misunderstood.
Yeah, sorry.
Is there anything unusual in these? What we're halfway through the year, is there anything unusual in our expenses? I know revenue is strictly a timing of payment from the.
There was no surprise according to the budget. But the reason I say that it could be a little below the budget is, for example, we have a budget for a new delivery truck. We have no idea when it will be delivered. We ordered about a year and a half ago, and still no delivery date so far. That's kind of. But on the other hand, the weather is out of our control. I don't know for sure how much we will spend on snow removal. Yeah. But based on past experience, I think we'll be a little below the budget.
On the first page in revenues, and you and I had a question with you the other day, but the interest on investment year to date is 204,000. How much of that is change in market value? Do you know,
Okay.
you got that number handy?
Very little. We are about maybe 70 to 80,000 above the cost. The market value is currently above the cost for those are short-term investment. So
This is strictly the general fund, correct?
yes,
So most of this is interest then?
yes. Yeah, I have a number here. Usually I provide a quarterly investment report for the board meeting. It will be uploaded to the board doc next week.
Right.
But I do have the number. For capital account, we received interest income about $132,000. Operating account is $88,000. And we pay the fee. The fee is from July to December. With discount and a new rate, it's a little below $15,000.
And just because I brought this up, at some point, we should be presenting the interest in the market value change, what I call below the net operating line, so that the fluctuations in market value don't affect revenues. That's typical in the GAAP reporting. I'm not going to speak as a government accounting expert, but I think the ebbs and flows of the market value changes should be below the line, and our revenue or the spending budget should be based on what I'll call normal recurring revenues. So we'll figure out when we make that change in the P&L presentation.
I have a question.
Yes.
On that topic, I assume we hold, we're talking about securities here that we hold in part of that discussion. We're holding those to maturity though, is that correct?
That's the historical practice. That's on our topic for.
Oh, all right, okay, that's good.
Item 6. Yeah, we'll get there. So. So Quan, if I look at the bottom line, you can go, Cody, go to the next page. So we are. I really don't have apples to apples on the bottom line. I've got $6,057,000 as a deficit against 11.3 million of last year, but that 11.3 also has a debt service transfer. Correct.
Yes, that's correct.
So
For excluding that one, yeah,
is what?
about $4 million in deficit last year, $6 million current year.
Oh, you're right. Okay, I was looking at the budget. Never mind. Okay. Any questions? Do you want to talk about capital fund? Capital fund page?
Well, on the revenue side, there was a property disposal. That's the $2 million from the Riverside, and also the East Independence, the land swap. That's an old River Bridge plus Riverside. That's about $2.7 million. On the expenditure side, the total amount we spent for capital plan is about $6.2 million plus $800,000 for Riverside. Again, that Riverside number includes the land, $650,000. So the total amount is about $7.28 million so far this year.
And just, that's a non-cash transaction. That 650 is just
That's correct.
a contractual swap. So there's really not cash changing hands. The cash was collected from Riverside.
Yes, $2 million.
No, well,
I mean, the net cash amount, yeah.
net cash.
$1.35 million.
Right. Okay. Any questions? All right, what else do you have in your financial statements, Quan?
Debt service, we only made one payment so far. That's for interest only. And the second payment will be in late February. Health insurance.
The second payment being principal payment.
Yes.
Okay.
Health insurance fund. The contribution is right at the target. Contribution from the employer and the employees is right at the target at this point. $1.8 million. The fixed costs, administrative cost plus reinsurance, that's a little over $600,000. We may spend about $1.2 million for the whole year. The budget $1 million. The medical claims is about $1.26 million. It's again, that's right on the target. We have about $1.6 million cash on hand, and the fund reserve is the $1.3 million. Based on the funding policy, the minimum fund balance required is $1.02 million. The maximum allowed is 1.7. So we are right about in the middle of those two numbers.
Can you go back to the admin?
These,
You said admin and access. Is that the excess insurance?
yeah,
So how do we pay that? Do we pay that in a single premium or is that?
yes, one.
How would we, okay, I'm used to seeing this, we know what those are. Are our administrative fees fixed?
Yes, sure, based on the contract.
And our excess insurance is a fixed price.
Yes, it's
So why would we be at 1.2 versus 1? Why will we end up at 1.2 versus $1 million?
okay.
Juan, do you want me to answer?
Go ahead, Jennifer.
Sure.
Sure. That is a per person premium. So per employee per month. So it does vary if we have, more or fewer employees enrolled. And whether or not they have dependent coverage. So those, there is sometimes a variance there could be because that can be off if we have turnover and people are in waiting periods, or if we have less turnover. And right now we're starting to lean towards less turnover. So that can account for some of that variance.
Okay, so we're paying a per capita rate for employees, correct?
Correct.
And how much of the $1 million is the excess? Roughly.
Okay, so that's the budget.
No, but what is our annual, is our excess charge, is that capped? Is it a variable rate based on payroll? Is it based on employees? How does that work?
That's based on employees.
Okay. So I guess I'm still confused on why we budgeted $1 million if we knew we were having more employees and more payroll. The 20%, being 20% off is
The budget is based on fiscal year. We prepare the budget for July to June. The contract is calendar year, right? Yeah, so, yeah, maybe.
So you're saying, okay. All right, I don't want to get bogged down in the details. I just like to get a little more information on this. Okay. So we have a better understanding. Okay, all right. Any other questions on the financial statements from anyone? No. Come back to those. You have had in the detail disbursement payroll, or the disbursement detail, sorry. That's 8 pages, a lot of information. I do have some questions on some of these. I thought of doing a rapid fire, but I don't want to take the time. I think it would be helpful with this to get some explanation about what some of these are. And what type of expenditures they are for, if that can be done. The operating side is just really hard to tell what line item category these relate to. And again, I would, if you want to ask questions on these, do you have questions, anyone? Yummy, Michelle, Bob?
The only question I have is, are there individual cards, or are there cards in the district's, library district's name, and their employees have used certain credit cards for purchases?
Yes.
And how many do we have that have, how many employees have those cards?
Okay, I'm going to interject here. That's covered in the Forbes report. We have the initial draft that Quan received. I think, have you returned your comments? Oh, okay. So once Quan returns his comments, that will then come back out and will be distributed to the committee. And there are a number of points in there on credit cards. We have a lot to answer your question.
Wait, I assumed you probably did.
Yes. And that's one of the points they made is it's, if I remember right, they're recommending the board that the library address that. So again, I don't want to, if that helps your question, but that is a top recommendation of coming out of the Forbes study.
Okay.
Yummy or Michelle?
No, I don't have anything.
Again, I'd like to work. I'd like to figure out a way to get some of the explanations in here about what these are, other than just operating. So this was intended to be a step, an incremental process. So as we work through this, we will improve the report to get better information for the finance committee and the board, and really to help us understand what's when we get to the budget, what is in the detailed numbers of the budget. Okay, personnel schedule. Jennifer, I know you're online, so do you want to talk to us about the schedule you put together?
Sure. There's not a lot to talk about this month. The places where we can see, again, we would expect at this point to be at around 50% to budget, but we know that we have some some positions that have been held open or are empty. So that would account overall for the 48.23% we are with pay. Some places are just a little bit over, and then we've had some, like we talked about last month, that we've had, a significantly long-term employee leave, which drives that cost up under programming support. But overall, there doesn't seem to be anything unexpected here, based on having had branches closed last year and where we are this year. But I'm open for questions.
Again, relative to where you are currently and looking at the latter half of the year, are you expecting to be below the budget? On budget? Where do you think we're going to land?
I do not. But we're doing some current work right now. Of course, we want to make sure that we can look for potential areas that might be unexpected. But I do not expect us to be too far under budget if we are under budget. I expect us to be at or very near budget.
Okay. This too is an iterative process, and if there are things that you would like to see expanded or more information on, then you voice those, whether here or just in an email, and we'll look to improve or make changes and improve this. But I think this is really helpful, as I said before, in understanding where the resources go at the operating level. Any questions? Comments? Yami or Michelle?
We're good.
Not at the moment.
Okay, all right. Okay, so let's move into the old business, the cash flow analysis. This is, as you recall, this is something we requested. It's obviously related to the capital plan and what has transpired over the last few months in learning about the liquidity issues with the capital assets held by Central Bank and Trust. As you recall, those were unfortunately invested in longer-term bullet duration bonds. Our yield on that is around 1%. The maturities go out, I think, until 2027. We didn't learn of this until sometime in the maybe third quarter. And so given that, and given the capital fund overage, which we'll talk about next, I asked Quan to put together a cash flow projection, which we have on the screen, I think, in front of you. We went through this in detail earlier this week. I don't think we have to walk through the mechanics of this. It's fairly straightforward. He just broke it down into 3 different segments for each fiscal year. Obviously, July to November is when we draw down against surplus. December to February is when the bulk of the tax revenues come in. And March to June is obviously the balance of the fiscal year. I would point you to, you can see where by the way, the revenues and the expenses are largely in sync with the levy work that was done for the September board meeting. Minor variances, but pretty much in sync with that. The debt payments are per the debt schedule. That's what Quan just talked about. So there'll be $5.2 million shifted to the debt service fund. That debt payment's paid in, when is it paid?
In February.
So it's paid in February, so they'll shift that in January, make the February payment. He has you'll see the capital fund component that is currently being funded by the general fund. And then you'll see a line called increase, decrease in accounts payable. That's just at the end of the year, there are payables accrued. I'm going to speak for Kwani, correct me. But month to month is largely cash operations. At the end of the fiscal year, there's an accrual made for the financial statements. Those accruals are paid in, let's say July, maybe perhaps spread into August. Then you're on cash basis until you get to the next June period end, and you book another accrual. So that's what you're seeing there is just accounting. So the critical issue is the fiscal 23-24 year, which is our current calendar year. You can see that we're looking at a cash deficit of $14 million. And that doesn't get resolved in the following fiscal year as well. This we'll talk about in the capital side is something with recently surfaced. Our last fiscal surfaced in early fourth quarter of calendar 22, second quarter of fiscal 23. So that's the operating piece. If you want to scroll down, Cody, you'll see the activity in the capital side that has just, it's very straightforward cash reconciliation, cash, the bond maturities. The $1,346,000 is the Riverside net proceeds. You'll see the what has been spent in that July to November actual column, and then the projected being to be spent for the remaining projects through fiscal 24.
The Story Center is from donations and grants.
You're saying the 50,000 will be paid out of grants?
Correct.
Okay.
And donations. The board voted on that a couple of months, 2-3 months ago. So that money is not tax dollars.
Okay, so that's just okay.
But that money is part of the investment. The capital project fund cash.
So the money is in the capital fund.
Yes.
Okay. All right.
Should it be in there?
But it came from grants and donations. So,
Yeah.
okay.
Well, assuming revenue and expenditure stays in the same fund, unless you want to move everything out of the capital project
It
fund.
seems like that should be in its own fund.
Well, we just have one capital project fund for construction.
All right, well,
Okay. Well, I just don't want people thinking we're spending tax dollars when they're not
no,
really.
it's
No, cash includes donation and the tax dollar.
yeah. Okay. We'll make a note for that. We have a grant and gift fund, don't we?
Yes, but those are for small programming grants.
I would suggest we create a separate fund. I know it's more accounting work, but this is the kind of thing, I just went through this with Platte County. They get a bunch of grants, all the counties do, and those monies have to be spent according to what those grant requirements are.
Correct.
And so you have this bucket full of accounts for those activities, and you also have you have a bucket full of funds, and those are kept out of the general fund or any other the major funds. So I think that's probably something in your new accounting system that I would, I believe I'm going to suggest we do and let Aaron and you follow up on that. So that's probably your points well taken. That probably shouldn't be in here.
I didn't mean to interrupt.
No,
I
it's
just
no,
didn't
no,
want
no,
people to
no.
think that we were spending tax dollars.
This is intended to be an open discussion, not a, not sit and listen. So Michelle and Yummy, before we proceed, do you have any questions, or is there anything on here that you don't need explanation on, need help with?
I don't think I have any questions. I'm just still truthfully processing all this and taking it all in and it just is what it is.
Well, the two big pieces at this point are obviously Riverside and East Independence, whether this cash flows out in one thing, Riverside is still a question on cost. East Independence, there are numbers in here. Again, I'm going to defer this to the board because the question is, I think this is around, I don't have the total in front of me, but I want to say it's close to $8 million. And so the question, there would be, are there pieces in there that can be deferred or eliminating construction, but I don't know what else is in there. So, and that's not the purpose of today, is to go through that level of detail. But we have a $14 million hole that has to be covered. Obviously, we thought we had a large surplus balance 4 months ago, and now we don't. And that's might have to be taken up. So I want to skip to go to the next one, which is the capital plan analysis. As you recall, we had requested this. This has been requested numerous times. I'm not going to repeat the history here. The board passed a resolution in October. There has been work on this. The numbers are still moving around a little bit. So can you pull that up, Cody?
Yes, just give me one moment, Gordon.
Okay. And I don't know which file you have, if you have a PDF or an Excel up there, I don't remember.
I've got an Excel file.
Okay.
All right, can you all see this in here? In the boardroom and online?
Yeah, but can you just increase that a little bit? Okay, there you go. Thank you. And then can you do me a favor? Can you, go up to go to cell D4. Click on cell D4. Go up to our menu to view. Next, right, move your arrow down a little bit. No, back up to the menu. Not review, but view, V-I-E-W. Okay, right, there should be, go to the right, to more, next, there to freeze panes, click on the freeze panes, hit the unfreeze, and then do this, and then go back and click on freeze.
Oh, good Lord. Okay, here we go.
Freeze the panes. Thank you. Okay. So now when we scroll, the column headings in the left side will stay intact. Okay. This is the detail this has been requested, showing the actual. I think the green is the actual plus the projected. If you scroll to the right, Cody, a little bit. On the brown column there is the paid through November. And then over to the right further, you have the estimate to complete. And those are estimates at this point for the most part, okay? So that's a lot of detail, okay? And you have if you go to the summary, just click to the next tab over, Cody, summary. There's a summary by vendor that also is a pivot table. The next tab over is the funding. We will come back to that. The next over is the capital improvement data. Those first columns A through G, if you go back and just hit Control Home or just go home, however you want to do it. Hit Control Home, 2 keys. There you go. Okay, so those columns A through G are your detail. It has it, you can see it's by date, project ID, the batch, the account number, which is how it's recorded in the general ledger, the category, the reference is, I think, in this case, simply the payee and the amount that was paid. Correct, Jake?
That is correct.
Okay, so the total of that column, I'm not going to make it scroll down to the bottom, just go back up to the summary tab at this point. The total of all that detail, I want you to scroll down, Cody, is that in column Q, the $103 million. I think that's what that is, right? Okay.
Just shy of that, yeah.
That's all right. I can see that now. I have my driving glasses on. Okay, the only, I pointed out yesterday, Cody, you can scroll to the left here and get the green columns in line. So I believe columns D, E, and F show the 22 actual and projected. Those are for construction. You'll see in column E, the budget, that this is, the request was go back to the original 2017 budget that was presented to, as an outcome of the Prop L vote and what was presented to taxpayers, and then the over and under for the construction cost in the aggregate, and that includes Riverside, is, can you blow those in the numbers up a little bit, or blow this page up a little bit? We're going to stay focused on those columns through J at this point. We can do a little bit more even. Okay, so including everything, we're $19 million over the original budget. And when you take out Riverside, we're 13 million over budget. Okay. The piece that's different about Riverside that's not in here, but it does not change the 13 million, is the $1,350,000 that they kicked in. Okay, the columns G, H, and I think are supposed to be the land, but those formulas, am I correct, Jake?
So when you look at column G, it actually references column P, which is the land in the paid to date.
Right.
And then column H is the actual budget.
Correct.
And then column I is adding them together and getting either the over or under budget for that.
Right, but column P is not $1,808,000.
I'm sorry.
I said, Cody, scroll over to column P. Column P is 5,401,000.
All right.
So anyway, so scroll back over to the left, Cody. So I'll just skip the long and the short and the land is it's, I think in the aggregate about where the budget was, it's in the 5.5 million range. So I don't want to focus on that. The real issue is 19 million. And if you go back to cash flow, that's why we have a cash flow deficit at this point. We have a liquidity issue going back to the central bank because we cannot, well, we can sell those bonds to fund this. What has been happening is we have been using the operating, or the general fund operating account to fund the capital side. So we don't have to sell the bonds. But again, you know, short-term rates are short-term treasuries and are in the 460 range. Have been when you get out in the 5-year range, they're, I think, right under 4% at this point. We're invested with a average yield of about 1%. Some of those bonds have a 60 basis point yield. So if we sell those longer duration bonds, we're going to take quite a hit on market value. So it'd be ideal if we could cash flow it, but we have a short-term cash flow issue as we saw on the other page to the tune of 14 million. So that has to be addressed in the coming months here. It's not something we have to panic about. There are a number of options to deal with this. I don't want to take the time here. I want to get the board up to speed on this. First, we will then, at least my recommendation, is that we have staff look at how this can be solved. Some of the proposals we've talked about, but I don't think they're viable, such as slow paying the contractors. I just don't think that's a good idea. So anyway, this is where we are. And there may be some things we can do in the short term to push out, whether it's East Independence, some of the component pieces of that. Riverside obviously hasn't even been approved at this point. I think there are some questions, at least I still have questions on some aspects of that, but we have a contractual obligation with Riverside that has to be fulfilled. No, has to be fulfilled at least by the summer of 2024. I know there's some leeway in that, but that'll be a board decision. Any questions?
Yeah.
Comments, Bob?
Yeah, I think for comments, I just want to make sure I understand where we are. So I'll start keeping on under the green line. And I'm looking at the totals through, well, if you start on the 22 project, 103 million, 103.6 million. And then how much then over or under is the total then again for the projects? I'm sure not all are complete.
Well, okay, so the first column is your actual paid through November.
Yes.
It's 103 million.
Right.
The original budget was 84.5. That's what's in the 2017 book. That's what's been in the budget book every year. That's what was approved. That number has been presented for 5-6 years now. And the next column over is the over under. So that's strictly the construction budget for the facilities. Okay. As I said, there's a formula error in the next column. I would ignore the next 3 columns. The land is largely, it didn't happen exactly as they panned out, but it's largely in line with the budget. Okay. The other components of the costs, Cody, scroll to the right. So the FF&E, the technology, design, moving, et cetera. I would like this schedule to be amended so we have a separate section for all of those pieces. So we can see there was, if you go back to the budget book, the original budget was 20, depends which one I use, 25.3 million. In the aggregate was the budget for that. The architect's fees was 8.5. I would like to see we're at 8.8 on the architect's fees. Actually, I'd like to see architect's fees broken out separately from everything else. And then you have FF&E allowance, IT equipment, and then the contingency, which is a question about how that gets allocated. There was a 5% contingency that was added, as I recall, or that's what's in here. If I'm correct, I think the architect assumed that was all available for construction. I don't know because I wasn't around when that was done. Is that?
I think that would be a fairly correct assessment, yes.
Okay, I think that's what
Typically use,
I think that's what he said.
yeah, when we do a construction budget, we typically use the contingency towards construction, not towards the other.
Okay, so when we do this, I want to see those broken out separately. Okay. But the other thing I recall from the discussion when he was here at the last meeting, I thought he said they were only 5 million over budget over the 84 million. We're at 13.
I'm sorry.
I thought the architect said, according to his records and calculation, they were 5 million over the original budget.
I believe that's what we say, yes.
Okay, so we're at 13. That's an $8 million gap. How does he have different numbers than what we do? Because these are dollars out the door.
We've already talked about the Riverside's 8 million, so there's your.
No, Riverside is separate. I'm talking about, Cody, scroll back to the left. So the architect said they are 5 million over. And I'm excluding Riverside, we're $13 million over. That's an $8 million gap. How can we be at 13 and he's at 5?
That's a good question.
I think we need an answer. I would like committee to have an answer. Can we have that by Tuesday's board meeting?
I can certainly try.
Gordon, I think this is my biggest frustration is, I've been on all these committees and I know, I've been one that's voted for these changes, but I don't understand why things weren't done this way all the way through this. I mean, this just, these are actual, why didn't we, I mean, I guess this is to Jake. Why are we just figuring this out now? Why did we not have a better handle on this? This was you were doing this. Why is this such a shock to us now?
It's a really good question, Michelle. When I was presenting the numbers up, they looked good. We did the deeper dive and now we're finding what we're finding. I can't answer that question, Michelle. I can't go back in time and say, well, this is where it should have been and now we're different. I will try to give you an answer as we continue to dig in deeper into the numbers. I do know that construction budgeting is different than actual accounting. So when we were looking at these and I was presenting my numbers in a construction budget, that's what I was giving to my boss. And then my boss was talking to the in a finance area and he was fine with it. So
how is construction budgeting different? And I'm asking this from, the numbers are the numbers. What the dollars that are going out the door are the dollars that are going out the door.
If you don't mind, may I share something? I'm not involved too much with the capital project. And,
right. I know you're not. Not.
And I only look on the numbers and I can give you some, simple explanations. The big variance, not counting Riverside, Winnie's auditorium, it's about $3 million over the budget. I believe that's because we added the landscape plan, right?
we had the cultural node and the landscaping.
That was not in the original budget.
Cody, can you scroll up a little bit while Kwan's talking,
Okay,
please?
so Jake, did you have no idea? You really had, you were in charge of this. You had no idea we were going to be $3 million over. That's not like 10,000. It's not even $1 million. That's 3 million.
Where is 3 million, Kwan? I don't see a 3. I see 6 million Riverside.
It was there. There was something over on that over column.
It should be $7 million.
Scroll down.
$7.2 million.
Oh, there it is. It's the last line. I'm sorry.
Yeah,
Okay.
on the under budget, it was $3 million. I don't know. I guess, coulda, shoulda, woulda, but the reality is, now we are, I don't know. In 11 years of being on this board, I can't even begin to explain how disappointed, angry, and upset I am. I have never felt like I've ever been misled so much in my life. And I have defended everyone ad nauseum. And while I get people are going to go to their offices and roll their eyes and whatever they're going to do at me, I have always defended everyone. I can't defend this. I can't defend this. And I am, this wouldn't fly in the military. And I think we all know this. And I just not having an answer, I think I can't force you to come up with an answer you don't have, but I just I think it's, I don't know. I'm not going to say it. I think you can fill in, read between the lines.
Well, Michelle, this is a yummy. I share your frustration, and the thing I really don't understand, and I've said this before, is especially the last couple of years when I was on the building committee, that we would sit there and things would be explained, usually by Steve. And maybe somebody should ask him about his accounting, because he was the one who would explain at every meeting, yes, this is over budget, but we have this other aspect that is under budget. So it's everything is a wash. And it's like, it would almost be worth going into looking at the videos of some of these, of the past building committee meetings, and you can see what was presented to us, that this is so-and-so amount over budget, yet it's being compensated because of this. So yeah, we're fine. I mean, at every single meeting, it was presented that before a vote, that it was fine and that we were totally within budget. I mean, do you remember this, Michelle?
Oh, why do you think I'm so upset? I remember all of this, and I just, and it's really easy to blame. It's real easy. And I'm not saying that Steve isn't the one. I get that he did the presenting and all that, but at the end of the day, I guess my biggest thing is integrity matters. And I don't care how all this stuff goes. If you know somebody's doing something wrong or whatever, you have an obligation to step up and do the right thing. And that's where I feel like something's missing here. And we owe the taxpayers an explanation. We owe a lot of people explanations. And I think that the people that I'm really, really angry over this, and I need to work on that. So I'm going to go on mute now and let you guys finish.
Well, I'm thinking, I'm not like blaming Steve, but maybe to give.
Oh, I'm blaming someone. I mean, somebody here, you don't get this far over budget by somebody's to blame. Absolutely. Somebody, we've been lied to. And I mean, the disappointment, I can be disappointed all day long, but at the end of the day, the numbers on this, taxpayers should be angry, should be infuriated. You know, people want to complain about, oh, the levy and all this. That's nothing compared to this.
Right.
And this is, and to sit here and then nobody knows. Nobody knows. I mean, I don't know. I can't answer. It doesn't work.
That's not acceptable.
I mean, it just doesn't work.
I'm just curious if, maybe Steve has some insight, something we're missing. Maybe he knows something. Maybe he understands some other accounting but I don't know.
I jump
Maybe
in?
somebody should ask him.
I mean, Michelle, I don't want to cut you off. Can I jump in?
Yeah, I'm done.
Jake, were you managing with a schedule like this? Or were you managing project to project? And never did
Managing project to project as we're going forward.
Okay, so this was the dashboard that was presented. Okay. This is on board docs every month. This is the one that I used, and it has 84.5 million under the current column. And this is the one that in May 29th, I came across $6.8 million of variance because the schedule doesn't foot. Okay, so the bill is, as Michelle and Yummy have pointed out, the building committee was presented this schedule month after month, and you're telling me that there was never anything done to look at where we stood in the aggregate, because this schedule doesn't foot. And somebody, I don't know who prepared this schedule.
I prepared it.
So your formula, so I don't have the Excel file, but is this an Excel file with formulas, or is the 84.5 million hard coded into the schedule?
No, it's with formulas.
It's formulas.
Yes.
Okay, so why does 84.5 million not equal the sum of the numbers that are in that current column?
Because when we were going forward with it, there's an exhibit 3 on the staff budget analysis response memo for June. 3.8 million was for the soft cost contingency, land savings of 2.25 million, GMP savings of 300,000, elevator of 230,000, which was from not from the capital project fund, but and then 165,000 from funds from Bill Mann to help with the Green Hills, and that equals your 6,793,775.
Do that again. Just replay the tape.
Replay the what?
Is this is detail from where?
This is from page 11 of the staff budget analysis response memo that was presented in
I
the.
remember that. It came out at 8 o'clock the night before the board meeting. No, I'm just stating the facts. So people know when that memo came out. Okay, so go ahead. Just replay the
So
tape.
the soft cost contingency was 3.8 million.
You're saying there were savings on the soft cost?
Now, the soft cost contingency, which was the 5 million that you pointed out earlier before that was put towards construction, 3.8 million of that 5.2 was soft cost contingency that was when we had scope increases.
Now you're really confusing me. The 5.2 million is on top of the 84 million.
Correct.
So how do I get savings of 3.8 million?
Not savings. We spent 3.8 million of the 5.2 million.
Well, we spent it all.
Well, yes, we did for everything.
So we spent it all.
You're correct. But I'm telling you, for this particular point, when you talked about the 6,793,775, of that 3.8 million of the contingency.
Okay, so you have a bunch of numbers, you have a bunch of components that come up to the 6.8 million that are not on this schedule. Correct?
That is correct.
And you're telling me that 84 million is a formula, but in fact, I added these numbers up, as I said in the prior meeting. I did this 5 times because I thought I was, honestly, I had the same reaction Michelle did. A little bit of disbelief. So I would like this worksheet. If there's a worksheet that goes back to that, I don't know if it even exists anymore. Okay. I'd like to see this initial worksheet. This is dated March 14, 22. But at this point, this is what's in front of us. Okay. If we never had a schedule like this, if this is the only schedule we had or the building committee had, it to me appears that was incomplete. It was inaccurate and obviously never synced up to the accounting records, which would be a normal process for how you manage a project like this. This entire project should have been from the get-go. Okay. Here's what we spent, here's what's left to complete, here's the aggregate, we're either over or under budget, here's what the total dollars are. As Michelle said, and I think quite accurately, the building committee should have, this should have been presented to the building committee a long time ago. Here we are. So I can't go back and redo things. I would like this schedule corrected before Tuesday, with the land separated, when architect's fees separated, and I want the other components laid out. If they can all be separated, I think we need to see where we stand on everything. And And we'll have that for discussion at the board meeting. And I would like to see a draft of this before you post it to board docs. So it shows what the questions are being asked here. People need to understand what is happening, where the variances are, not in the aggregate, but this is easy. You have the detail. It's easy to do component calculations and lay that out. So I would appreciate if that can get done by, is that okay? I'm talking to you.
That's fine.
Okay.
We can get it done. We get all the numbers done.
Well, these are pivot tables. I mean, honestly, I you know, I had the detail. I did a summary table like this. It took me about an hour. I used some commands. I didn't use pivot tables. I don't, at this level, for the people that don't understand Excel or don't have the same versions, some commands are a little easier to manipulate, and it avoids line movement around. But I think at this, we need to get down to the detail, and then the board needs to see the detail at the line item level. So this shouldn't take that long to do.
Before we go, I have the floor.
Sure.
I just, I follow what you took, getting down to the 19 million. So does our staff concur that there's probably a $19 million shortage at this point? And I ask only because you can be mad all you want for the last 5 years or 6 years, or whatever it might have been. We have to go forward and we need to get it resolved. And so if we agree this is what we need to go forward with, then that's good. And then we do need to do this as a team. But so does our staff agree with the $19 million shortage on the schedule?
Who are you asking?
Anyway,
All right. Wait for an answer.
Yes,
Yes.
by construction, by looking at the cost for construction. Again, construction may not just be includes payment made to J. Duns and to other subcontractors. $19 million over 2017 budget.
Well, that's really all I was asking. I have, if we concur this is probably correct, then we need to adopt a program to resolve that then and finish what we promised voters in 2016. So I realize I've been here 60 days and haven't had any of these other meetings and, so forth, but
We're glad you're.
I would think that probably, Chair, that we would ask our staff to put forward some plans, some concepts to, I lost my $19 million. Yeah, to resolve the $19 million deficit and complete projects. And
That's my intent. I wanted to get this to the board Tuesday.
And then I wonder if we can do
and then
that.
have the board make that request as opposed.
Oh, that's okay. Yeah, I've read our policy, board policy. That's right. That's probably it.
I mean,
That's where it needs to
we can have a consensus here that that's what we're going to do if there's no voting item for that. So unless Michelle or Yummy, unless there's you have some other thoughts, is that consensus of the? Is
That
your-
sounds good. That sounds good to me.
Okay.
Yeah,
I mean-
so we don't need to vote on this or
No,
put it in.
there's no voting. There's nothing.
It's
to
not a
vote.
voting item.
There's nothing to vote on.
Okay, okay.
We're trying to just get squared away in where we are. Jim, you've been.
Sorry. Okay, so looking at all this, because I've been involved trying to help us figure out how to communicate about this now. I've been trying to figure it out for myself. Bob, I think there's some of the word choices we make all the way through here matter. Are we $19 million short? No. Are we $19 million over the original budget? That's probably pretty close, I think. One of the things
Schedule says.
I know. One of the things the reason staff created the presentation we created was to give sort of a narrative of where we feel like we've been. That's where we added projects, now, what I'm hearing today, I think, is that especially on the phone, is that board members feel like when they were approving those projects, I'm not hearing anybody say they didn't approve those projects. They're saying they felt misled when they approved those projects. Well, that's fine, and that's probably something we should address at some point, for sure.
Absolutely. I
But
would
there's
agree
a-
with that statement, Jim.
But there still is a difference in what staff have said, what we said in our December memo and what we're saying now, is that what we lack to finish all of the building projects, including Riverside, is $8 million. So the plan is to fill an $8 million gap, not a $19 million gap.
Well,
It depends on if we're looking backwards or forwards.
okay, let's go back. There were changes that the board approved on a piecemeal basis, okay? Without the benefit of this schedule or a schedule like this saying this is where we stand. So yes, you made changes. Yes, the board approved them. Would the board have done something different if they'd known they were going to be $19 million budget?
Yeah.
I don't know. My guess is they would have. Okay. So again, that's history. We have a funding gap that is not 8 million, it is $14 million. That's on the cash flow schedule. Okay. According to what we have here. Okay. That has to be resolved. Okay. That's not going to that you don't do with just accounting. Okay. That's not something that's going to get resolved in 8 months. Okay. You have a funding deficit of 14 million that has to get addressed way before November. And then you have the issue of how projects are managed in this organization. And what is lacking is this form of project management. I'm not going to go into history. Okay. This was totally avoidable in my view. My personal view, this all should have been avoided. This schedule should have been done from the get-go. I think I said that 10 minutes ago. It should have been presented every quarter. It should have been synced up to the accounting records. The only thing that matters is cash out the door and what you have left to done there. And Jake, with all due respect, there is no difference between construction accounting and what's on the books. What's on the books rules because that's the cash out the door. It is incumbent on the management of this organization, the staff of this organization to reconcile those two to make sure there is nothing missing and that the reporting to the board has integrity. It is accurate, it is reliable, and it has integrity behind it. It has no questions behind it. There's no guesswork. The only guesswork is what's left to be done and the timing of it. With that, we need to move on, okay? I mean, we're not going to solve this here. I think
No, and I think there's discussion in December about some possibilities of moving from the general budget to construction. But yeah, I assume we'll take more time.
We're going to get to that after the board's up to speed and what's going on.
Yeah, I can do that.
Okay, so the next item on the agenda is the Prop L RFQ you guys received, I think was on board docs, a copy of the RFQ. This was initially approved in September. There are some things that we know now that we didn't know then. And given that we're, correct my note here, 19 million over budget, 13 without Riverside, and we have liquidity issues. If you go back, the purpose of the review initially was to just get some assurance to the board and especially the public that the funds were used as intended in compliance with contract, things were done in accordance with contracts, that the activities underneath the costs, the billings, the payments are made in accordance or done in accordance with industry standards. The RFQ has language, and again, this didn't come out until late December. So they're and basically tabled it until here. But the way it's worded, and my concern, as I've explained it to you on the committee, the folks on the committee, is that I don't think it has enough precision, and I can see this just being an incredibly wide range of responses. The other thing, as I've talked to a couple people, without a scope definition and a proper framing, the fees on this could run, I'm going to tell you, $250,000 plus. Okay, depends on how people review it and respond to it. That was not the original intent. So if we throw this out as it is, I would expect a wide range of responses. That's going to cause another cycle for things. That is not a good use of staff time or the committee's time. The other, and probably of equal concern to me, and maybe more important concern, is that if the RFQ is directed by staff, it puts the staff between the board and the review function. This, in my view, has to be an independent review on behalf of the board, not directed by staff. Okay. When you look at how financial statement audit is done, the board engages the financial statement auditor. The auditor has to be independent of the entity. It has to be independent of the board, and it has to be independent of staff. The risk we have is, the way it's currently structured is that staff would be directing a review of its own activities, and that creates potential for conflict of interest. The motion I have later is subject to legal review. I think we have authority to do this from what I'm reading in the policy book on page 85. It says items exempted from competitive bidding are as follows. Professional services is outlined in RSMO 182.630 and 182.630. 0.9, subparagraph 9 reads as follows: to retain or authorize the librarian to retain and employ accountants. So from the board standpoint, to retain and employ accountants, bookkeeping services, architects, financial advisors, legal counsel, business managers, consultants, or other persons offering specialized services on the conditions and for reasonable fees as the board may determine. So I'd like to get the attorney to just give us an opinion that we're not going to the one way of authority on this. And secondly, that there's not some other statute that would preclude us from doing that. So that's the premise of that component. The reason I'm recommending we change the way we're proceeding on this, number one, nobody on the board is a construction expert. I definitely am not. I think the fact that we're sitting where we are probably confirms that no one else would have brought this to the table sooner. And I definitely don't want to be. I don't think the committee should be responsible for defining the scope of this, given that we don't have the construction expertise. So by doing this with an outside expert, we eliminate staff bias, any ability for staff to influence the selections of how things are done, any influence for staff to direct the expert. Again, from a financial statement audit, staff is providing information to the independent auditors. They do not direct in any form how the audit is conducted. And obviously any ability for staff to influence the final report. So again, independence is critical here. The process, as I'm proposing, is that we engage an expert. I've asked Andy Erpelding to come here from CFO Systems. I know CFO Systems because I know the founder of the company. I've not worked with them. They have some incredible expertise, not just locally, but nationwide. One of their local executives is a 30-year construction expert. I'll let Andy talk about that. Depending on how we proceed after this discussion, the board will be asked to submit other potential experts for this phase. And then assuming we agree to proceed, we'll at the February meeting make a recommendation and or to approve proceeding at the February board meeting. So that's my recommendation to the committee. Again, I've asked Andy Erpelding to come here and talk about CFO Systems. And with that, I'm going to let you make your own introduction.
Sure. Here?
Yes. All right, so if you will. And the camera's up there, so that's the reason I have you pointed. Right. You can talk this way.
Yeah, I'll
Either
go back and forth. I'll do my best. Andy Erpelding, Kansas City resident since 2012. talk a little bit about my background, a little bit about CFO Systems background, and what we do as a firm. My background, I spent 8 years in public accounting, one with Fortis, formerly BKD, and Ernst & Young. After public accounting, I moved into publicly traded companies and private equity firms, and spent the next 10 years in private industry as controller, VP of finance, and ultimately CFO. In 2020, I moved into the role that I have today as the office or expansion office leader for CFO Systems, where we have senior accountants, controllers, CFOs, human resource professionals that provide resources, professional expertise to middle market, emerging middle market companies across all industries. Construction happens to be one of the industries we have a lot of focus in. And so from that perspective, I've been working for CFO Systems for 3 years, leading and managing the Kansas City office. CFO Systems as a whole started in 2004 in Omaha, Nebraska. Nationwide, as a firm, we have over 100 professionals, mostly CFOs and controllers across all industry expertise, with about 2,400 years of cumulative experience as operators. So not just auditors or treasury managers or accountants, but people that have gone in and run businesses, helped lead change in businesses, helped understand how to move businesses forward. From a perspective of this project, and Gordon mentioned it, there are several team members on the Kansas City team, Michelle Phillips being the obvious right choice or potential expert for this project. Started in construction long time ago, 30 years ago, has built and managed and led construction companies up into the billions in revenues. She's gone through and led the construction practice for Kansas City CFO Systems for the last 1.5 years, working on solely construction companies. So managing projects, understanding how the construction company prices, evaluates, reviews all of their projects and construction projects from over budget, under budget, what the timing looks like on that. Our motto and our core values help us retain a lot of very seasoned professionals where they will work on a fractional basis, 10, 20, 30 hours a week for separate clients. And it gives us a lot of flexibility and ability to see and manage and use best practices across many different industries, companies, firms. From that standpoint, our core values are family first, truth and transparency, get stuff done, and team. So we work as a team pretty closely. It's not unusual for us to have 2 or 3 individuals that have various experiences within an industry or within a company to provide that lead, best practice. Here's how we get stuff done. From that standpoint, the team in Kansas City is 20 people strong and have the capacity and the experience to take on a project that is construction related, but we also do have some not-for-profit governmental experience. So fund accounting is not new to us. I'll leave it there for questions.
Michelle, Yummy, Bob?
No.
Nope.
I want to go back. When we started discussing this, I had some initial discussions with Brett Freevert, who was the founder, about, where do you even go with this? I think I mentioned, Bob, this is probably before you came on the board and on the committee. We saw this as a multi-step project. The initial phase would be just the scoping, which is what it's proposing here, to scope this and decide what to do, because it's we're at the tail end of this whole thing, so I can't go back and change some of the components. What I can go back and do is make sure that we follow practices and best practices and follow the contracts, and that there's no surprises. Again, like an auditor, you can't guarantee that you'll find anything because you don't go looking for that, but you do some testing, and hopefully if you come across that, then it leads to more questions and more inquiries. So this was intended to be the initial phase. The second phase is then would then be to go back out with an RFQ and what I'll call a more clearly defined scope of procedures and activities, so that the people who are going to respond, and obviously CFO Systems would expect to be one of the respondents, that they have a pretty good idea. I say that because when we did the disbursements RFQ, we had a fairly wide range of responses and fees, as Quan remembers. And we went back and so we had discussions with each of them, each of the respondents, and asked them to revise their fees. And obviously then we made the selection and that report will come about. So this is a bit of the same process. So we don't want to have this take 2 or 3 rounds to get to where we can get the project moving. And again, they have the experience, they have obviously the construction expertise sitting in the local market here. It doesn't have to come from out of town. So that is what's being presented. Unless Michelle or Yummy or Bob, you have some questions, I'm going to put the motion up on the board. Are there any questions?
I think,
Go ahead.
one, you asked for an attorney's opinion on this. Is that?
Just so we're not stepping, I don't want to step.
No, I agree.
Here, yeah.
Yeah, because I can look at that too. And
well, as I said, the 182.630 says we can, but I don't know if there's something else out there that says we can't.
yeah, no, I
agree. I'm assuming this is a fairly simple answer from the attorney because this happened in Platte County, so I know statutory. I think statutory.
Well, and it's the same thing. It's historical from being on the Lee's Summit City Council that certain things have to be bid and others. It doesn't have to be. And
right.
So I'd like to have an attorney's concurrence.
So Cody, do you have the motion you can put up?
I do not have a motion, not in the presentation.
Okay.
Can I just,
do you want to read it or do you want me to read it?
Doesn't matter.
Okay,
It's right
so the motion, I'll read this. I have to get my glasses adjusted. Subject to legal review, there's a typo there, legal review and approval as to statutory authority. The motion to the board is to approve engaging an expert to assist the Finance Committee and board with defining the scope and framework of the Prop L capital plan review, such input to be used in the RFQ, and with such cost not to exceed $8,000 of the previous board approved total project cost of $60,000. So to rephrase that, when we did this in September, we didn't know what it was going to be. I picked 8,000. That's a little higher than what I think that's enough to get going. We'll find out. I'm hoping it comes in under that, but that's the cap we would authorize at this level for this phase of the project. And then the second phase will be determined by the RFQ and how it's defined. So that's the motion on the table. Discussion.
You need a second before you can
yes.
discuss.
I'm sorry. Okay. All right.
Sorry.
Sorry.
Gotta have a second.
I can make the motion.
And you can.
Yes.
Yeah, you
Okay.
can.
So is there a
Yeah.
second for that?
Bob just did it.
Bob did. Okay.
So now you can do discussion.
All right.
And then you can vote.
Michelle, Yummy,
No, I don't have anything.
Does the motion include hiring this company?
Well, the motion includes hiring an expert. We will tomorrow send out an email to the board asking them if they have any others that they would like to recommend we consider. And in the meantime, we will ask CFO Systems to put together an engagement letter to be presented at the February Finance Committee meeting. And
Okay,
anybody else. So we'll make a decision. I don't know. I don't know of anybody else. Obviously, we can go to, I don't know anybody else who has that experience at that level. And that's the reason I asked them to come today.
Okay, sounds good.
Still a discussion.
Yes.
Yeah, one more thing. Because I was one that previously at another position, as I said, questioned, why don't we bid for engineering services? And was given the professional designation. I can agree or disagree with the attorneys all day. So, yeah, I don't know if this is professional services or not. Sounds like it is, but that's why I give the opinion also. And you are going to mention in your memo that board members have other individuals to be considered.
I did just to cover the basis. We need to do that.
I don't know this industry, but
So, and I don't either.
yes.
So that's why we're doing this.
Yeah, I'm fine.
Okay, all in favor, say aye.
Aye.
Bye.
That's, and me, I'm an aye, so it's 4-0. Okay, other business, there's nothing on the table. The only thing I'm going to say,
Hey,
I'm sorry.
excuse me. You still need to ask for no's and abstentions.
there's nobody here. Okay, all right.
Well,
Anybody?
Yeah.
Pardon me?
I should have said that as well.
Oh.
Because we had everyone voted yes. I did not. I apologize for that, Dr.
So I still need to ask for Nick? Okay, those opposed?
Kind of redundant, but yeah.
And any abstentions? Sorry. Okay, the only other item of business I have is just to let you, I think I already said it, the Forbes report has been sent to Quan, a draft. I have a draft that he forwarded to me. I'm assuming that as soon as Quan turns that around, we'll have that sometime next week for the Finance Committee to review. And then and Forbes will be here in February to present their report, and they will also present it at the February board meeting. And there are some good findings in that report. So, any other business?
Yes.
Yes.
Since we're going to ask the attorney about an opinion, I'm of the opinion that these votes should be roll call votes under Robert's Rules of Order. So can we add another question for the attorney to give an opinion on?
That has to go through the board president. It's not committee. The committee doesn't have the ability.
I have no problem talking about this at an open board meeting.
Well, no.
No, I really,
That needs to go to the board president.
because frankly, I see motions in here that really bother me, the way that's, the procedure, not how the votes go.
And that's fine. This is the way business has been conducted. And if there was a legal issue about it, I think the legal issue is more important than Robert's Rules of Order. That's just my opinion. Everybody's allowed to speak. Everybody's allowed to voice their opinion. And we get to a conclusion. I think, open discussion is great. So let's, as I said,
We're talking about it.
the committee doesn't, I don't think the committee should have any different rules than the board. So please.
Gordon, can I,
Yes.
this is, can I bring up one other thing? Bob, I just wanted to let you know, I believe I've heard this several times, and I think I've read it in our policy, is that we are to, in general, follow Robert's Rules of Order, but we are not bound to that. So there's some things that we can use it as a guideline, but we are actually not, bound to if we want to do something a little differently.
I'm not sure that's correct. Let me discuss. I was reading this. We'll talk about this.
Okay,
Yeah.
so.
I'm just
so
saying,
this
Bob,
isn't
just
that-
look at-
Yummy,
let me
just for the
finish this
sake of
for you.
everybody's time,
I
I'm
just
gonna
want
defer
to
this-
finish my
Yummy,
sentence.
I'm
Okay.
sorry, I'm gonna defer this
Just look it
discussion.
over.
Board
Just
pre-
look it over.
Let me
Thank you.
fin, but Yummy, I'm gonna defer this discussion to the board president. It is not a committee matter. It's not on the agenda. And it has to come through the board president. So I'm going to cease discuss, please, let's close down the discussion on it. Is there any other business? If not, I'm gonna ask for an adjournment. Motion and a second to adjourn.
Michelle, so move, or I'll make the motion to adjourn.
Is there a second? Is there a second to adjourn?
Second.
All right. All in favor, say aye.
Aye.
Hi.
Aye.
Aye. Any opposed? No. Any abstentions? I don't hear any.